Hi, I'm Danny Brown and I'm the CEO of Myriad Real Estate Group, and today I wanted to talk about Zillow and the panic that they have created. As you may or may not be aware, Zillow made a big announcement about a week ago and then an even bigger announcement yesterday, where first they were pausing their iBuyer program, and then yesterday they announced that they were canceling it altogether. This has prompted a flood of YouTube videos from quote-unquote experts talking about how this may be the first domino to fall, causing a housing market crash. I waited a little while to do a video because I wanted to gather more information and not, yell fire in a crowded movie theater. I don't think that this is going to be the first domino that falls that causes a housing market crash. And I wanted to first explain why by talking about the fundamentals behind Zillow and Zillow Offers program. Zillow had their third quarter earnings report, and it came out that they have lost over $390 million in the third quarter alone through their Zillow Offers program. And while they work through the rest of their inventory, they will lose over $550 million through their Zillow Offers program. So essentially, they're really bad at flipping houses and are cutting their losses now because they have to report to shareholders, and these are huge, huge losses that they're facing. So I've done previous videos explaining what iBuyers are, and we'll link to it in the notes below. But basically what an iBuyer is it's a company or an institutional investor that will come in and purchase your home for cash. And then the idea is for them to turn around and then sell it for a profit. So fundamentally, they want to try and purchase the home below market value, charge you a fee of somewhere between 5 and 12%. And then sell the home for hopefully a profit. Zillow Offers makes up 68% of their overall revenue, while making up over 80% of their overall expenses. So huge problem right there between 68% revenue and 80% expenses. It also makes up 66% of the $4.4 billion corporate debt that Zillow carries. So their iBuyer program is really capital intensive. In September, Zillow, the median purchase price of a home for Zillow was $475,000, while the median sales price for a home in September was $392,000. So you can see the disparity between what they paid for it and what they ended up selling for. And when they lose money on every single sale that they're doing, it's not a recipe for success, more so disaster. So one of Zillow's biggest competitors is Opendoor. And Opendoor currently owns 2,100 homes in all of Arizona. Their median sales price for a home that they're purchasing is $420,000, while they're turning around and selling it later at $425,000. So you can see how razor thin the margins are when it comes to the iBuyer programs. And Opendoor's been around for a long time. They have first mover advantage. They're the ones that everybody kind of thinks about when you think of an iBuyer program. So if anybody knows how to do it, it's them. And if they're only on average making $5,000 per transaction, you can see what a tight market it is for them to operate in. They're reporting their earnings next week, so it's gonna be very interesting to see if they are profitable. If they are profitable, it will be the first time that since they've become publicly traded that they will report profits in a single quarter. Every quarter prior to this, they have reported losses. So if they can't make money in a market that we've been in over the last year and a half, it really brings to question, is the iBuyer program and scaling real estate to a large scale nationwide program actually feasible with the technology and the resources that we have now? It's such a capital intensive thing to get into. And it's not like buying and trading stock. It takes time. There's, again, subtle nuance to purchasing these properties, and the margins are just super, super razor thin. Unfortunately, Zillow is also going to be laying off at least 25% of their workforce. They've hired upwards of 3,000 people to help manage their Zillow Offer program. They currently have 8,000 employees total. I would suspect that the number of people that they're going to be laying off due to the failure of their iBuyer program is going to be higher than 25%. Currently, Zillow holds 7,000 properties nationwide, which sounds like a lot, but when you think about the overall number of homes listed for sale and that are owned, 7,000 homes is very small, so their market share is not very great. And their plan is not to flood the market with these properties and fire sale. Their plan is to sell them to institutional investors or REITs, which are companies that are buying up residential property, packaging them into an investment product that we can all invest in, and those properties get turned into rentals. So for example, BlackRock is the largest owner of residential real estate in the United States, so they will probably be a player in this. And Zillow is going to be selling off these large chunks of homes to them rather than putting them on the open market so that you and I have an option to purchase them. Their existing properties that are listed for sale, they're not fire selling them. They have been purchasing those properties at really inflated prices, then listing them for sale at even higher inflated prices, and then they've just been sitting. People aren't viewing them. They're not making offers, and then we're seeing them do price reductions, and then they sell at the price that they probably should have been listed at and purchased by them at originally. So fundamentally, what this tells me is that the Zillow Zestimate is a massive problem for the company. So a company that touts their Zestimate and being able to value homes and can't value the homes themselves when it comes to buying them properly just proves further that that Zestimate tool is not very good. Zillow has touted that they can use their algorithm to establish the value of any property. And most realtors out there will tell you that the Zestimate is more often than not completely inaccurate. And I think that what we're seeing Zillow go through and the debacle of their iBuyer program is directly linked to how flawed an algorithm is at valuing a property. Valuing a property requires nuance, and I don't think an algorithm can take that nuance into consideration because neighborhoods are very different, areas are very different, and real estate is very local. And I think that you need a local expert to be able to pull the right properties to accurately value a home. And an algorithm just can't do that. Now, sometimes the Zestimate will be right. I mean, a blind squirrel finds a nut every now and again, but more often than not, it's super wrong. And I think that everything that Zillow is going through reinforces the fact that their Zestimate tool is just so inaccurate, because if they can't get it to work for them when they're purchasing the properties, how can they get it to work properly for anybody else? So let's talk about Zillow and the greater Phoenix area in Arizona specifically. So currently Zillow only owns 700 properties in all of Arizona. So it's a very small number of properties that they own. So I don't think that that is going to really impact our local housing market directly. So at the end of the day, this is why I don't think the sky is falling. I think that Zillow is terrible at flipping homes. I always tell all of our investor clients who are considering getting into flipping that you make your money on the purchase, not the sale. If you purchase the home for too much money, it's going to screw everything up. You don't have any incidentals baked in, and you're not protecting yourself. You always make the money on a flip in the purchase, not the sale, which I know sounds backwards. And Zillow was really bad at purchasing homes on the front end, which is why they have failed miserably. And I think that this is just systemic to the iBuyer program in general. And I'll be very interested to see what Opendoor reports next week. If they report losses, it further proves the point that the iBuyer program just fundamentally doesn't work. If they report profitability, then I think it reinforces that Zillow doesn't know what they're doing when it comes to valuing property. So don't pay attention to Zestimates, and they don't know how to flip homes. So So I know there's a lot of real estate YouTubers out there. I don't view myself as one of those. I want to help people buy and sell homes, and I put out videos on the side to hopefully give you guys greater understanding and greater knowledge. I'm not looking to become YouTube famous. I think a lot of the people that put out videos yesterday and are going to continue to put out videos that say that the sky is falling and that this indicates a market crash are looking for people within their echo chamber who already think that the real estate market is going to crash at some point in time, and they're looking for likes and subscriptions, which I am too. But so don't forget to like and subscribe. But I think that they're just playing at the fears that are out there. They're not really looking at the data or doing the research. So I'm just speculating. Do your research. Don't listen to real estate YouTubers and create your own opinions. And I think that you'll come to the reasonable conclusion that Zillow is just really bad at what they do.